Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to continue the series we've been doing on this channel of going through my dividend tracking spreadsheet. And today we're going to be looking at the calculations specifically for the number of shares. It seems like a pretty simple calculation, but it's not quite as easy as you would think. And then we're also going to be talking about calculations for average cost and percentage increase in stock price, and my overall position, how I calculate basically my returns essentially. So right here, this is the shares column that I have in this main summary page, and how I'm getting the number of shares is every single time I make a transaction, I put it into this transactions tab over here, split up into buys on the left here in purplish and sells on the right here in reddish. As you can see, there's not many sells overall, but basically what I do is I put in every single transaction, and there's a lot more buys here. You can see these rows from 17 to 119 are basically hidden, so just so you don't have to scroll down as far. But basically what I do there is I have a Python script, and every month I download a CSV file with all my transactions from Fidelity, and then I can just enter that into that Python script, and that Python script will parse it and automatically enter all the transactions in my spreadsheet in the format that I want. So the value I just record is the ticker symbol, the date I made the transaction, the number of shares I bought or sold, the average cost for that, and then the total amount of that order. So if I bought 0.6 shares of Pfizer, it basically does the calculation of 0.6 shares times the average cost to give me the total amount that I invested in Pfizer at that point in time. So basically, for the share calculation, what I'm doing is I'm just adding up all the number of shares bought and subtracting that from all the number of shares sold. So you can see the shares that I buy are a positive number, and the shares when I sell them, they're a negative number. And so that's how that works there. And to sort of explain this formula a little more, I'm using a Sumif function, and basically what that does is it looks across a range of rows, or just a range in general, and it tries to find a specific value, and that specific value is the second argument to that function. So for example, in this case, for ExxonMobil, it looks in cell A2 for the ticker symbol. So it's trying to find ExxonMobil, the ticker symbol XOM, and it's looking for XOM in the transactions tab, cells, pretty much all the cells in the A column. So how this works is transactions exclamation, that means we want to reference to the transactions tab down here at the bottom, and then that says we want to look through basically column A to column A. So all of column A it's going to search through, and it's going to search for XOM, the ticker symbol, and it's going to add up the shares in that corresponding column. So the final criteria here is this third argument, which is the range to sum. So basically it's going to sum the corresponding cell in the transactions tab, that's the number of shares, and that corresponds to the actual ticker symbol of ExxonMobil. So if we expand this to find an ExxonMobil, I'll show you what it means. So basically it's going to find an ExxonMobil. It sees XOM, so it says we want to look in this row because that matches the ticker symbol. And then it's going to add up the share amount, which is 1, and then it's going to go down to this row and add up the share amount of 0.24. And then I think there was one other time I bought, so it's going to go down here and add up wherever that is. Let's see. Yeah, right here, it's going to add up this, it's going to find this XOM as well and add that 0.09 shares in as well. And then what it's going to do, it's going to do the same thing, but it's going to search through these cells columns and look through these number of shares. So it's going to subtract these number of shares basically. And that's how we end up with the final number of shares for ExxonMobil of 0.09. And we do a similar thing for all the other number of shares. So we're also going to look at the performance tab here and how I'm calculating average cost and my returns. So this definitely isn't a perfect calculation, but in most cases it is pretty good and gets me pretty close, just sort of an approximation of my returns. So the way I'm calculating the average cost is just by summing up the total amount of money that I initially invested in a specific company and then dividing it by the total number of shares that I bought of that specific company. And I'll explain in a second why this isn't a perfect calculation. So the formula itself, we're just doing a sum if formula with the same column from the transactions tab for the ticker and comparing it to the ticker of each stock. And then for the actual range of what to sum up, we're summing up the transactions tab in column E. And if we look in column E, that's the order price, which is how much we invested in that stock at that specific or for that specific buy. And then that's going to be like some sort of sum, and then we're dividing that by pretty much the same calculation we used to get the number of shares bought. And the problem with this is that this is sort of treating it as if we are buying shares and they're just kind of getting thrown into a batch, and the average cost of all of them are the same. And that's not really the case, because with Fidelity, you can choose to sell specific lots of shares, which I have done. So this calculation pretty much works and lines up perfectly with what Fidelity will show me as my average cost, only if I have not sold that stock, some of it. So pretty much the only one it doesn't work for is ExxonMobil, because it's not exactly perfect there, because I sold some specific shares. I sold specific lots of shares that I had bought at specific prices. And so that kind of messes up the calculation a little bit, but it's not that big of a deal. And I couldn't really think of a better way to do it aside from, maybe I could every month like download the CSV of the portfolio holdings from Fidelity. But at that point, it's not really much better. It's not really any sort of time saving, I guess, because I would still have to go through that every month, So if anyone has any better ideas as to how I could calculate that average cost, that would be appreciated. But for me, it's not that big of a deal because I don't plan on selling, all that often, and most of the times if I sell, it's going to be like selling out of a position completely. So that doesn't really matter as much. But then what I do, so this is the average cost that I'm calculating. And then the next column here is the current price, which I'm just using the Google Finance function to find the price there. And then this initial equity is, the total amount that I initially invested in the company. And that's just the average cost times the number of shares there. And then the equity now is, what that position is worth now, which is just the number of shares times the current price. And then next in column G here, I'm calculating return per share, which is just the current price minus my average cost. And then I'm calculating a percent return based on, the return per share divided by the average cost. And then the total return is a dollar amount, which is just the return per share times the number of shares. So that's how much, my investment has gained. And I guess I could also, for this one, I could have just done the equity now minus initial equity, but it's pretty much the same calculation, so it doesn't really matter all that much. And as you can see, I'm highlighting these based on if I'm losing money or have gained money on that position. So right now we just have AT&T and Leggett and Platt that have actually lost money on those positions so far, at least with capital gains that are unrealized. And then this cash down here, this is just showing the amount of cash I have. Obviously, the average cost is sort of the same, at least. Obviously there's inflation, but we're just going to ignore that for this case. So then I'm calculating the total amount invested, and this one's kind of tricky. Basically what I'm doing is I'm summing the total amount of equity that I've invested. And then the next thing I'm doing is I'm actually subtracting the dividend payments I've received. And the reason for that is because the dividend payments I receive just go back into my account as cash. And then I'm using that cash to buy more shares in these companies. So it looks like I'm investing that cash, and it sort of looks like I'm just depositing that cash from my bank account, but in reality, some of that cash is coming from the dividend payments. So I'm subtracting that off because I haven't really invested those dividend payments myself. Those were like returns from the companies. And then I'm also subtracting any cash that I got back from sales of companies. So you can see over here in this end column, these are basically profits that I've received. So for my ExxonMobil position, I got about $32 in profit because the average cost, when I sold those shares was a lot higher than when I bought them. So I had some profit there. So that's additional cash available that I didn't directly deposit. And so I'm including that in the calculation as well, because like I said, that's initial cash that I have available to invest that I didn't initially deposit. It was a return of my investment that I got back. And then this 7.8, this is basically the dollars that I was up in my portfolio back when I had this portfolio in Robinhood. So this sort of goes back all the way to the beginning of 2020, I guess. So that's sort of, at this point, it's kind of negligible, but I just subtracted that off as well because I did have some returns from that portfolio when I started this one in Fidelity. Basically what I did, I didn't really like Robinhood anymore for a dividend portfolio, so I just sold all my holdings in Robinhood and bought the same ones back in Fidelity. So that sort of, it might seem that my average costs might have been inflated a little bit because I just bought them back at a different time. So that's why I subtracted off that number. It doesn't really make that big of a difference. And then the current value, obviously, that's just the sum of the equity now. And then I'm calculating the return in dollars, just subtracting the current value minus total invested. And then percent return is just the, dollars returned divided by total invested. So these calculations, they're not perfect, but it is a good way for me to, get a grasp on how my investments are going and give myself a rough estimate of what my portfolio is returning. And this is, I'll add a caveat in there, this is basically since beginning of 2020 when I started that portfolio. So that's almost been 2 years now. And obviously the market has returned more than that. But like I've said in videos before, this portfolio for me is really just, an experiment, a learning experience of how to invest in individual companies, specifically dividend companies, and just a learning process of getting better at that, so that when I have a lot more capital to invest in a few years, I won't be going through that learning process. I'll already be pretty proficient and have a pretty solid foundation. So if you guys do have any questions about any of the calculations I went over in this video, or any questions about the prior portfolio videos, let me know in the comments below. I'll leave some links to those prior spreadsheet videos in the comment section and links down below. And with that, I will see you guys in the next one.